Our miner is about to see a new golden age of exploration and growth. I'm David Lynn. Joining me now is Darren Blasutti, CEO of America's Gold and Silver here at the Vancouver Resource Investment Conference. Thank you for being with us, Darren.
My pleasure, David. Always great to do an interview with Kitco.
Thank you very much. So your stock grew 70% over the last year. I was just looking at prices. So walk us through how you did that.
Really, I think it's been, we built a new mine through 2017 into 2018. That mine provided a lot of free cash flow for the company. That allowed us to buy a gold company called Pershing Gold in October 2018, right at the real bottom of the gold price at around $1,180. And so that stock had gone from $5 or so to about $1.20. We were able to capitalize on that. That was definitely it. And then we funded it in early April. And one of the things about the beginning of last year wasn't always a good year. When we were able to fund a gold mine, put it into production, and say you're going to pour gold, which we will in the next couple of weeks. So I think people saw the value in the company, and so there's some growth and a lot of value.
Absolutely. And we're going to talk about your assets and your growth plans in a bit. But first, I want to get your thoughts on the industry as a whole and what your personal sentiment is on the health of the mining sector right now.
I think in the precious metals, I think it's excellent right now. I think you're going to see the major miners have spectacular Q4 and Q1 earnings, given where the gold price is right now. I think also you're seeing a real difference between the haves and the have-nots, and what I mean by that, the companies with good management, with good projects are getting funded. The companies with not so good management and not great projects are not getting funded. And I think that's the right answer. You don't want to be in this euphoric stretch that you're in sometimes, where on the back of a napkin people are funding things, and then therefore people are losing money. And I think we've seen the burnout of crypto. We've seen the burnout of cannabis stocks in Canada. And I think people want to see the industry healthy, making money. The big guys make money, and then they'll go down, and then the intermediates will make money, and then the juniors will make money. And I think that's the right way to go.
So, as CEO of a mid-tier junior, where are you positioned in terms of strategy? Are you more focused on exploration or expanding your current production assets?
Well, just by definition, it's been hard to be focused on exploration because nobody's had any money. Okay. And so I think we've all kind of put projects into production. If you had high return projects you could get in, you got that. So I think that the focus has been on growing your cash flow base. And for the first time, we're going to spend about $4 million drilling our deposits this year, and that number is 4 times what we drilled the last 3 years combined. Yeah. So I think the focus for us is get our mines to free cash flow, get Relief Canyon, which is our new mine, up and generating that 20 to 25,000 ounces a month. It probably generates in 2021, when it gets to full ramp up, probably about $40 million of free cash flow. So when you got that, you can spend $3 or $4 million a year kind of drilling it out. But again, I think there's a priority right now for us to find projects that make money and put that into place. There's a time to buy assets and put them into production, and there's a time when things are really expensive and you're going to drill your own projects. And right now it's buy and get bigger, and I think you've seen that with Lee Gold and Equinox get together, 2 assets, same size, up 30-40% on the fact of a merger. And so that's the way I think right now to find the best value in the market.
Gold prices are sort of hitting a plateau. I mean, having a hard time breaching 1,600. Now, as a CEO of a miner, I know price forecasts aren't really sort of your focus, and you're focused more on cost management. Where do you see prices headed in terms of how it affects your mining as an industry?
Well, I think the bigger mover is silver. I think for gold, we're going to produce gold in 2021 at less than $800 in sustaining costs. So whether we're at $1,400, $1,500, $1,600, we're going to make money. I think the biggest challenge is for the silver industry, because as I said, at $15 all in sustaining cost, everybody was losing money and they couldn't even cover their G&A. And so it's moved to kind of $17, $18, but that's not exactly creating a lot of value in the sense of maybe you're paying for your costs, but you can't drill, you can't bring new projects on. So I think what we really need to see is for prices, from my perspective, is we got silver at 85 to 1. Yeah. And so seeing that back at 65 or so, I think that will ignite the silver industry. And so for us, we've got 100 million ounces of silver in the ground, and we're producing 2.
You manage a company that produces so many different types of metals.
Yeah.
Where do you learn to how do you prioritize which to produce more, or which to allocate more assets into production?
And I think it's really return on capital.
Okay.
And so again, as I said, when we looked inside our company in mid-2018, we could not make money on silver, but we went out and we found a gold company that was very undervalued and we thought had a big return. That's turned out to be a good bet, obviously. And so we have allocated all of our money in the last year to getting Relief Canyon up and running. And as we look, and if we see silver prices going towards 20, then you'll see some money going in there because we can make real returns on silver at those prices. But right now, we've been kind of running it as the silver assets as they go, putting lots of money into gold, hoping to see that. And as I said, I think we'll continue to look. Anytime you can buy a gold asset in Nevada for 0.2 times its NAV, if those opportunities exist, we'll buy more. And so the challenge has been, and we've always been bullish on silver because there's very few assets. Yeah. There's very few assets that produce a lot of silver. There's very few assets. The scarcity of companies is big. Yeah. But at some point, you got to make money. And so if you've seen Hecla, you've seen Coeur, you've seen all these companies, Silver Standard, move into gold. We were similar, not because we didn't like silver, it's because we just couldn't find the returns in silver. Yeah. And so, I think there's going to be a re-rating in silver. I'm not Eric Sprott, who's a big shareholder of ours, and I'm not Keith Neumeyer, but again, I could see off a $1,600 base silver going to $22, $23, and that would be transformational for the silver industry at this point.
Wow, okay. Would that happen anytime soon?
Listen, if I could prognosticate, I'd be living on an island somewhere with a golf course, but my view is you've seen gold move. We think the move in gold is real. As those guys start to make money and people start to come into the industry, they'll realize that the silver companies are undervalued, and I think that you'll see it. And I'm going to guess the next 12 to 18 months if I had to.
Wow. Last question. Given current prices, do you think we're in an environment that's conducive to more mergers and acquisitions? Do you see more of that happening in the next year and a half?
Absolutely, and I see it accelerating like a snowball down the hill.
Wow. Darren Blasutti, great thoughts. Thanks for coming on the show.
My pleasure.
And, continued success with your company.
Thank you.
We're continuing coverage of the Vancouver Resource Investment Conference. Stay tuned to Kitco.com for more interviews. Thank you.